Okay, I'm here with Shubha Gupta, one of my favorite mortgage brokers, who's about to enlighten us with a lot of information. So, Shubha, I recently got an email from a client asking me for some questions about what's happening with OSFI and their 2% increase. So, I'm going to just show you really quickly the article that was shared with me. And do you see it right here?
I do, yeah.
Okay, perfect. So this one was here. It said OSFI tightens rules on uninsured mortgages. It looks like there's going to be a 2% increase. So if you
I think
can,
it's on. I think it went to your screen saver.
yeah, it's fine. I recorded it, but that's all good.
Okay, cool.
All right, you're back. Where'd you go? There you are. All right, so tell us about it.
So the first thing I'll point out, Sharif, and this is something that you and I have talked about many, many times, which is don't just read the headline. You got to read the article because that article that you just put up, the headline clearly said that OFSI's changed rules,
Right.
and it hasn't been yet.
Okay.
Right now, it is just a proposal, and it's been a proposal now for a few months, and the mortgage industry's been working very closely with them on trying to determine, some of the pros and cons of this and the impacts that it may have in the mortgage and the housing market. But as of today, nothing has changed. Nothing is different. We're status quo, business as usual as it was yesterday.
Okay. So
Now,
yeah, go ahead.
jumping into what the changes are, should the changes become, or should the proposal pass, and should these changes pass the process, is that they're suggesting that. So you recall back in October of last year when the rule changes were made that all insured or high ratio borrowers were to have to qualify at the Bank of Canada benchmark rate. They called that the stress test.
Correct.
So we've been running on that now for the past few months, quite a bit of time, and we've seen some impacts that that's made. Basically, this rule change is very similar to that, although it's impacting uninsured mortgages. So those putting 20% down or more that have typically qualified at what was the actual contract rate, they will now also be subject to a stress test. And actually, a bigger stress test than first time home buyers, where those insured mortgages qualify at the Bank of Canada benchmark rate, which is right now at 4.84%,
Right.
5-year fixed hovering around 3%. The new proposed rule changes will dictate that the stress test will be 2% more than the contract rate.
So Shubha,
So
I
that's
thought the banks were already doing this. I thought the banks were already practicing this in theory and already putting into implementation. So I thought the banks were already doing this anyways, and they weren't waiting for a mandate. Is that the case, or was I reading it wrong?
no, no. So it's been a little bit different. The stress test that you're thinking of that's in place right now is only affecting those that are putting less than 20% down, or those seeking out an insurable mortgage product. And you'll recall one of our past videos when we talked about the difference between insurable and uninsurable. If you're looking for a better rate, if you need to get a 30-year amortization, or if you're purchasing a rental property, or if you're purchasing $1 million plus, you are uninsurable. You automatically fall into that uninsurable category. Those clients were still qualifying at the contract rate.
Okay.
Which, one of the things, and we'll talk about it as this video goes on, but it's created pros and cons to both sides, both impacting first time home buyers as well as, those
Yeah.
later in the mortgage life cycle.
Well, and that's just it, Shubha. Like we're seeing all these new changes, interest rates increasing. You have the stress tests, and then you have prices being so high, and then the liberal Housing Fairness Act. All these changes, they're coming at us, really fast and furious. And are we heading for the storm? Is the market going to crash because of all this?
And it's always very difficult to say, but we always have a positive outlook on what's happening. And, we have to entrust that the changes are being made in our benefit and to protect the consumer, protect the people, protect the housing market and Canadians as a whole. If we specifically look at this change and we talk about some of the pros and cons, and we touch on the cons first, the rule change that was made in the past October that's been implemented and been practiced for the last few months, it's really affecting one segment of the home buying market, which is the first time home buyers. People who are coming in with a 5%, 10%, 15% down payment, fresh out of school, they're having to qualify at this higher rate. They're getting subject to the stress test, which is decreasing their purchasing power. They're unable to buy and keep up with what those that are putting larger down payments are able to do. So it's almost created this unfair playing field for first time home buyers. And personally, when I started my career, as did you, we were working with a lot of first time home buyers and helping these people get into homes. And these are the backbone of the future. And these are the people that need to buy homes today in order to sustain what's going to happen for us, years down the road.
Yeah, and I strongly believe that it's for someone to improve their quality of life for the future, owning a home is really important today.
Of course.
And we're seeing about 100 inquiries a month coming to our website, people looking for homes, and we're seeing buyers coming with a budget of 250, 400,000, and 450,000. The truth is that in this core GTA, you can't find any homes for sale in 450. The
Yeah.
average price they're saying is $1 million in Toronto. Just
Yeah.
outside, if you went to Ajax, you wanted a townhome, you're paying 650. If you came out to Markham, the average townhome is about 750 to $800,000. And then for 450, you have to go past Oshawa, you have to go past Curtis, or you have to go Guelph and Kitchener-Waterloo. So we're seeing that first-time home buyers, where are they going to get their money from? Where are they going to get their deposits from? Are they borrowing from their parents, or like how are they going to ever come closer to Toronto?
Yeah, and I mean, and that's a good point that you bring up. And I think that's in line with some of the thought process that's going behind this rule change and this proposed rule change is that, right now, first time home buyers are being forced to qualify. And 450 sounds, very reasonable for what we're seeing the average qualification for given income levels and debt levels in that demographic.
Right.
So where are these people moving to? They're all moving into the outskirts and past the outskirts, essentially, or what we've typically known as the outskirts, into those bedroom communities that you've mentioned. What this proposed rule change is going to do is going to create more of a level playing field. So whereas the prices have been kept higher and consistently increasing because should you come in with a larger down payment, you're still able to qualify at the contract rate or at the lower rate, it's going to keep prices at that level, pushing out these first-time home buyers. Now, if we create this even keel playing field, where regardless of what you're putting down, you're going to have to qualify. Just because you're putting a larger down payment doesn't necessarily mean your income allows you to qualify for more based on this, even playing field.
Right.
So over a period of time, we may see a lag in this, but we may see the prices begin to stabilize and come more in line with income levels or qualification levels as we know it, right? And if that happens, then at least it gives equal opportunity to, first-time home buyers as well as second-time move-up and downsizers, wherever you are in your mortgage life cycle. Right. It creates a playing field that allows you opportunity from all sides of the fence, right?
Yeah, and I think we also have a reality here. There's a truth to everything that's happening now, is that Toronto is becoming an expensive market. And if you are wanting to live in the city or live in Toronto and take advantage of the infrastructure and the lifestyle, you're living in a condo lifestyle, right? I just saw a report yesterday that came out that the average condo now is about $580,000 essentially, and that's a 30% increase since last year. And I know that the condo market has been sitting flat for about 4 years, and all of a sudden we see a big 30% jump, which is great for all these condo owners. And I think, I was at a RAIN conference last year as well, and they were saying that, or early this year, that the new 2-bedroom condo is the new house. So I think if you want to live in Toronto, you have to adjust that lifestyle, right? So in terms of mortgages as well, are you seeing banks turn down condo mortgages? Is there something there that we should be cautious about?
Specifically speaking to condos, not yet. It's something that everybody's watching and everybody's looking at. If we were to look back to alternative lenders and see what they're doing, they've adjusted their loan to value. You always look to alternative lenders because they're higher risk mortgages than the insured products and the prime lenders and stuff.
Right.
So they're often ahead of the lending curve. They're often, making sure that they're well protected and the risk is mitigated against. So they've begun to decrease the loan to value on condos, but that's been for some time right now.
Right.
Given the spur that we're seeing in the condo market, it's definitely something that we're seeing a lot of buyers leaning towards and definitely going into. And they're still qualifying for them. They're still getting mortgages on them.
Right.
Everything is great from that perspective.
Perfect. I have one last question for you. And what we're seeing in the market are with the appraisals coming in lesser in value from the purchase price. Is that still an issue now, or has that leveled off? Because I know for some time, a couple months ago, a home would sell for 1 point something million, and then the appraisal will come in about $100,000 lower. Is that still a concern, or has everything now leveled off?
We're still seeing some of the after effects of that.
Okay.
The after effects of those that purchased in the spring market high, and the summer market kind of tapered off a little bit, leaving less comparables and lower price points for the appraisers when they're assessing the value. Is it beginning to change slightly? There's definitely more activity right now over the last couple of weeks that we've begun to see. It's a lagging effect, so it'll take a little bit of time before it catches back up and it's up to par. So something to be cognizant of when home shopping and
Right.
ensuring that your appraisal value is coming in at what you need it to come in at, so that you can ensure you have the financing that you need.
Perfect. So listen, Shubha, we're out of time now. Let's sum all this up together. So give us a quick, brief overview of everything we've discussed, and then let people know where they can reach you.
For sure. To sum it all up, Sharif, I would say, the sky is not falling. The market is not crashing. This is not going to lead to doom and gloom. This is just another rule change. It's just something else that we will adapt to and we will evolve to. And we will make sure to help and walk our clients through it, handhold them, and make sure that they understand how this impacts them, if it does at all. Things to keep in mind is that there's always benefits to the con. So even though we may not see it, there could be a silver lining to this dark cloud. Some of the things that we did talk about, which is creating more of an even playing field, allowing first-time home buyers opportunities. Those are all great things. Economy has been doing great as of late. Canadian dollar has been doing great. So these interest rate increases that we're seeing overall is good for the economy, is good for us. Bad for us borrowing, great for us investing. And our savings accounts are earning more, our GICs are earning more, our investments are earning more. The economy is doing well. I wouldn't be too concerned right now. I think
Awesome.
that we're in a market, we're in a great country, we're in a market that could withstand some change. And often we talk about this often, and we talk to our clients about this often. Your home price really only matters at 3 points in your life: when you buy, when you sell, and if you refinance. And everything that happens in between, it could go up or down. But if it's not at one of those points, it doesn't really affect anybody, right? So just, hold true, keep those investments, keep those properties and ride them out, right?
Awesome. Thanks, man. Shubha, where can people reach you? What's your phone number, email address?
You can call me anytime you need at 416-669-2046, or at shuba@capitallend.ca, or anytime you need, you can reach my partner, Sharif Nathlu, and he knows where to reach me.
Awesome. And if you're looking for a home to purchase, please take a look at cgtahouses.com. And you can call me as well at 416-274-1513 and be happy to help you out through this process. You guys take care, and we'll see you again next week.